Daja Hao. Dagai Ho. Dagai. Correct? Dagai Ho. I am Anil from Europe. I am an expert in finance protection, and today I'm going to show you how to apply finance protection on your digital assets. It's called hedging. What is hedging? Reduce risk against market volatility rather than making a profit. How? Actually, most people have, whether they know it or not, engaged in hedging. For example, when you buy life insurance to support your family, in the case of your death, this is a hedge. You pay money in monthly sums for the coverage provided by insurance company. Hedge is example of real-world insurance. By hedging, you cannot make a huge return out of it, but at least increase the stable value of your asset portfolio over undesirable market conditions. So by hedging, you are not going to make a huge profit, but at least you can have a stable profit. Hedging is a risk minimizing strategy, typically by taking an offsetting position on one's primary asset. So by hedging, risk controlling strategy. How to do hedging? Diversify your portfolio. Commonly taught, like, don't put all your eggs in one basket strategy. That's the simplest way to hedge assets. There are many different categories of investment, including stocks, bonds, real estate, and international investment. You can split your coin investment into different coins. Hedge with a pairs rate means convert into a safe coin or a stable coin. Using options and futures are advanced hedging strategies. Your profile should be managed by a broker or investment advisor. Who are the people are doing hedging? A miner, an ICO project, a fund, a big holder. Why a miner needs to do hedging? People are buying miner machine to get huge rewards from the network, but they don't want to sell their coin at the low price, so they need to do hedging. An ICO project issue their own coin to raise their fund. After, they are going to get lots of cryptocurrencies from the investors. They also wouldn't sell their coin over undesirable market conditions. They need to do hedging. A fund, a corporate, or a bank who manage investors' assets. They need to protect the value of fund, so they do hedging. A big holder, a person, individual who has lots of cryptocurrencies, but they are not able to sell their coin at one significant time, so they do hedging. How stable coin can jump in and save the day? Let's see on the graph. Here on the graph, we can see the waves of Bitcoin values by years. So as we may remember, once upon a time, Bitcoin value rises almost 20,000 USD dollar per Bitcoin. That was the right time, ideal point to switch our Bitcoins to stable coin. Once that make a U-turn at 4,000 level, that was the right time. We could reinvest at the ideal point our assets to Bitcoin. So in the graph, we can see that purchasing Bitcoin can accumulate in gain and achieving a greater profit. So I want to show one good trade example which was happening in real and in one day. So what's happening in the graph? I do trade and I sold out all my Bitcoins when it was at 1,180 USD dollar per Bitcoin. After a while, I make a new buy order when it was at 1,120 USD dollar per Bitcoin. So the trade in the graph alone was almost 5% gain of my capital. The percentage return from hedging alone was amazing. Over time, you are going to create a compounding effect with your trading account. The more money you have, the more money you make. Actually, that is what is our professional team do with your assets. We are always chasing a chance of trade, as I just explained in the graph. What method we use in hedging? Short selling. Trade in a platform with leverage. Futures. Doing protection in a period of months. Swaps. doing conversion into a safe coin or a stable coin. Options is advanced hedging strategies. Your profile should be managed by investment advisor. So let's see the differences between those four methods. Short selling, we remember, is a trading platform with leverage. So it's easy to understand. It's a little bit hard to apply on platforms. Cost efficiency is the cheapest one as long as you can pay a small fee for hedging. Futures. Futures doing protection in a period of month. It's hard to understand it, but it's easy to apply on platforms. Cost efficiency is the most expensive one because you do protection for a period of month. Swaps. Swaps, remember, doing conversion into a safe coin or stable coin. So if you are not an expert, like we investors, we may not know the right time doing conversion. So it's hard to understand, but easy to apply on platforms. Cost efficiency is reasonable because you're doing protection period of several days. Options, advanced hedging strategies. It's easy to understand, easy to apply on platforms. Cost efficiency a little bit also expensive if you can pay a little bit more fee to your broker. So please let's look the video. So remember, short selling is one of the hedging strategies we use. When we back to is moving, here is the green color. We can say we do buy when the price is increasing, and the red color we sell when the price is going down. So the trade is controlling by us. Why choose HT Trader team? So here on the graph, we can see our company's profit performance. Our profit is between 7 to 10%. So as you guys remember, our profit is not higher than the other two teams, MX and EC. But we provide a stable profit, which is not less than 7%. Thank you. 谢谢.